Good evening. This is the Elliott wave update for the NASDAQ 100 for Wednesday, April 27th, 2022. And the market does remain interesting, to say the least. Here we are again, and another bounce, and is being generated by recent earnings reports, and then added to by today's earnings reports, where we saw both PayPal and Facebook have decent results, and both responding very favorably, although PayPal is more muted than Facebook because PayPal is only up $5, while Facebook is up a lot. It's up over 30 points and still chugging along. Now, understandably, Facebook is a more widely held, more unicorn-like status, does have an extremely intelligent and brilliant mind in charge of the whole thing, the founder. Whether I agree with his strategies, whether I agree with his methodology, whether I agree with his business ethics, makes no difference. He remains intelligent. He remains very wise and good at what he does. So that has allowed him to amass a fortune. Now, how this all plays out, again, remains our focus for this week, because again, I am going to start here on the daily, and on this daily, I have no changes except down on the intra-hour chart. And that is where our changes are happening. So I continue to feel that the market is going to turn and continue to drop. And these earnings reports that are coming in, like Facebook going up the amount of money that it's gone up, I don't know if they're just calling it relief or whatever their trip is. But when I saw the earnings, I believe that forecast to actual was like 5 cents or less. I'm not sure, but that's what my brain's telling me. So it's not like they blew the doors off. But I guess someone may have felt relieved because it didn't drop to 40 or 35 or something down below. So off we went into the wild blue yonder on the backs of Facebook. Now, we have been discussing how that is all going to fit in to the current picture. So no changes to this larger picture. We remain in an intermediate third wave down, and inside of that, we are tracking the development of 5 waves of minor degree down, of which we have 1 and 2 complete. We're inside that third, and as I have discussed before, that this particular wave is where I do believe we will see more than one subdivision within all of the action. And so far within this intermediate third, we have 3. We're on our third subdivision. Within it, we're on our second. So let me drop down to the hourly chart where we can pick it up and take a look. Now, I continue to mark this as the end of minute 1. And then Tuesday's high, or the Globex high Monday to Tuesday, I leave as the high and the completion point for my minute wave 2. So that was, we have one subdivision on the minor degree, next subdivision on the minute degree, and now we're putting one in on the sub-minute degree. So I'm going to go with this for a couple of reasons, because I don't have anything. I talk about that we need to have concrete evidence. We need to have not just more hearsay, not just a report from somebody, not just a one-off deal on buying history with Facebook. So in other words, it's like, to believe, I find it always very astounding, always have, that they at least now do have a conference where they can give forward guidance, but they could always be wrong. In fact, many, many times they chat it up because they want prices. They want to have a stock price to go higher. They want to look good to a declining world, a declining market. Unfortunately, and I don't know who gave the conference today, if it was Zuckerberg, if it was the CFO, who knows? In any case, as I said before, everything will be rolling down the hill. I don't see, although Zuckerberg has billions of dollars, Sheryl Sandberg has billions of dollars. I mean, they don't need to be doing what they're doing, but they continue to do it. So it's kind of like holding on to power. Who knows? In any case, I do not believe that Facebook has enough storage cash in the storeroom to withstand everything that's going to happen and pay all of the employees and pay for the property where all their offices sit, many of them empty, to continue to pay for this forward guidance. So eventually things start to get cut back. So again, everything rolls down the food chain, down the pecking order. And we're sitting below all of that because we're the ones that are working for Facebook and again and again and so forth. So I think much of what we see is like to buy the stock up over $30 as on results that were okay. They beat the street. They did beat the street, but not by a large margin. And I don't know. I have not listened in, and I don't intend to listen in on a conference call that is again talking up the future, which is something we truly can only go on what our emotions are telling us. And right now, that's how Elliott measures. So I'm counting this as an additional subdivision, and we're in the second wave. We could be done with the second wave. I don't think so. If I take this down to a 30-minute chart, we must allow for continued upside. A little bit different. The S&P can also be done, but I think that what we may have is an A and a B and a C. So that's the A wave, maybe. And then we have an ABC down to here, and that's the B wave. And now we got a C wave in the boiler, but you can see higher, higher, high, a lower high, and wedging. Never a really good sign, but it's wedging. So it could be wedging and do a little breakout to the upside and then just die. So if I believe we're in an additional second wave, what are the possibilities? Where can it go? First thing I can do, I can put on some very basic, and I will be removing this so that we don't clog up the screen. But we're going to go from that high down to that low. Yes, it's right there. It's 01. 01, come on, come on, come on. Close enough. I would refine it, but right now, for the sake of the length of the update, that surpassed 382, it surpassed 50. It could go to 618. It can go here where we have double 13,355 to 13,380 is the 200 moving 200 MA and the 30-minute 200 MA and the Fibonacci resistance. So if I took this back out to the hourly chart, let's take a peek. The 200 MA, I got that mixed up because it is the 200 on the 30. Yes, the 200. The 200, the 200 on the hourly, much higher, in fact, invalidates the count. So here on the hourly, we have the 50. The 50 has been touched, went down, came back, touched it again, went down, maybe come up and touch it again. So it continues to be resistance, even though it's declining. So a couple of things. We're looking for only a wave 2. It has potential. We must allow for it to come up to here. It can actually get all the way back up to there if it wants to. Just cannot break this high, which currently is 13,584. If it breaks 84 with a little bit of oomph, no, my answer is going to be no. It's not a wave 2 correction. And then we're looking at a much larger correction, in which case, and I'll tell you right now, this minute one would get pulled lower because it continues to decline in 5 and rallies in 3s. And as long as it continues to do that, the rallies are corrective. The trend is down. So again, even technically, I don't have any reason to go against what the actual wave patterns are telling me. We just have to be patient. But I will say that the longer and more time they take fooling around like they are, is going to make that next leg very clear in direction and hopefully good to trade, because trading this, folks, that is like, get out of the pool. And because there's, you've got bullish engulfing, bearish engulfing, a little bullish together engulfing, a little together bearish engulfing, a little bullish after the market closes on some earnings. It could be taken out like that. We saw it happen. We've seen it happen several times. So why would we now believe that it can't happen again? And what I mean is that we had Tesla. Tesla was trading at 1,092 after its earnings. And that was just last week. So here we have Tesla trading, struggling to stay above $900 today, by the way. So again, we've got a couple of things going on that could just turn the market back to reality. And the reality is that interest rates have not hit their bond price low, yield high. And to think that it has, you're being real early and going in and buying bonds. Even as a place to park dollars, really bad choice at this point. Now, I do think we continue lower. I do think the longer that it fiddles, the longer that we subdivide, it's going to create a big old vacuum and it's just going to start dropping. So again, we nudged all the way down to 12,800 yesterday. Now we're all the way back up, pushing against 13,200 and then on up. So these swings are been wild. Bringing into the picture, we now have another expiration on Friday. Guess who expires? Google, Facebook, Microsoft, Netflix, NVIDIA, everybody who's been up at bat the last couple of, week and a half. We have Tesla. Twitter's earnings come out next week, but hey, Twitter was down again today. I thought it was a done deal, folks. Again, over exuberant without concrete facts. Yeah, he's making a play. He physically, or he, verbally did say, hey, I made a bid. It's good. I got my financing together. I'm making it formal. I want to buy. Twitter gets together and goes like, we get to cash out. He wants to pay $54 billion. Why fight it? Take your money and run. So I would expect that it's going to go through, but now it's got a lot of barriers to jump, a lot of hoops to go through, a lot of dancing to do to get the deal done. So nothing's done until the money changes hands, and that has not happened. Now, back at the ranch, for tomorrow, we have to allow for continued upside. Now, again, tomorrow's the 28th. That kind of concludes the week, and we have Amazon and we have Apple. So the last two gigantic titans are reporting tomorrow. Rumors abound on what Apple is going to say. Rumors abound what Amazon's going to say. And I want to tell you, that played out today with Amazon in these huge swings of $100. That does a lot of movement in your underlying, and of course the stock, but on the indexes that Amazon is privy to be a member of, hence the S&P and the NASDAQ. So I'm counting, I have exact counts for the NASDAQ and for the S&P. Now, granted, there's a difference of 400 stocks. S&P has 400 more, but here's the deal. The top 7 stocks that are contributing the most to the volatility and the movement are NASDAQ Titans. So yeah, they're moving together because the 7 Titans are the ones contributing to the movement. Now that's, I don't know, that unequal weighting, I have too much weighting or Reed spear adjustment. I don't make that call. I'm just saying the way it is right now. Now, tomorrow, leave the space for additional upside. We've got 2 major companies. It could fly right through all of this, folks. And then we're likely going to be confronted with a lot of decision. If it should, if they kind of blow the doors off and just whack this thing back up, I'll deal, I'll get through it, I'll figure it out, but do not fight it. That's my other point. Do not fight it. It's not happening until tomorrow after the close, but still, tomorrow during the day, I'm sure there'll be a lot of back and forth. So I did mean what I say when I tell you that I hate trading corrections, and this is why, because you get caught in this stuff. I was like, no, we're buying it. No, we're selling it. No, we're buying it. And it just whacks you in the jaw, excuse me, one too many times, and you just stop. So, and you become a bystander, which is often the better place to be because these are computers and buttons are being pressed, sometimes simultaneously or a couple of seconds apart. So you get a whip on a downside and a turn and a double whip going up, all in the same 30 seconds. So a lot is going on. All right. Downside, it's endless. So if it really starts to go down and they're hitting it and they're selling it, don't fight it. These are types of moves that wherever direction we're going, you do your best to follow along. The upside right now is more counter trend. So it's sloppy. So if we drop back into trend, it's going to be obvious and it's going to be easier because the sellers will overpower whatever buying needs are still there. That's my point. Okay, leaving it here. Trade smart, trade well, trade using these moving averages, folks. Use them, use the Fibonacci, put it in place so that you can follow and realize and trade and have a great trading day. And our next update will be on Thursday, the 28th.